So, hi everybody, this is Hub. I'm Giacomo, and today we're covering Tesla. This is one of the stocks that you asked me. So, before we get into the analysis, make sure to like, subscribe, and comment for the next stocks you want me to analyze. If you're interested in the databases that I use for this analysis, the links will be in the description, so make sure to check them out. Without further ado, let's get into it. So, Tesla. Very well-known name. We all know it. Tesla operates in the car manufacturing business. So let's see what Wall Street thinks about Tesla in this particular moment. So we see that 56% of analysts still recommend a buy, 34% recommend a hold, and 9.7% recommend a sell right now. So we have quite a lot of new reports that came out just a few days ago. So this is the price target trend. Let's see for the last year and so on. So we see that pretty much all over the place. We can see this trend that went upwards until the end of the year, and then it went more and more down because of the current situation in the economy. So let's take a look based on the latest reports that came out. Let's see Wedbush, for example. So let's see what Wedbush recommended for Tesla right now. We can see that it has a 5.3 performance score that is pretty good. This performance score is given out based on the price targets that were set up in the past and based on how different it was from the trading price at the moment where the recommendation was put out and how long it took to get to the price target. So we can see that a lot of times he actually met the price target, so that could be a good indicator. So we see that right now it still holds a pretty positive recommendation on outperform, but the price has changed, going down. And another thing we have to consider, when the prices start to go down, a lot of analysts don't want to take too much of a negative outlook, too much of a negative recommendation on the stock, because a lot of times these investment banks work along with these companies for other services like investment banking services and so on. So we just have to see what is the trend and understand where is Tesla right now. Let's see a few others. Let's see Cohen. It also changed the price target. Let's take a look. There we go. So Cohen, it has been more conservative in the past, and now it has a price target that is slightly less than the current trading price. So that could be an interesting indicator. So okay, let's take a look at the recommendation that it made earlier this year in June. Let's take a look what they had to say. So Cohen analyst lowered the firm's price target on Tesla. The analyst trimmed Q2 estimates given China's zero COVID policy, and we'll see that China is a very important market for Tesla, not only because it makes cars there, but it's the second largest market for Tesla after the United States. So we see why he lowered the price target. Let's see a few others. So let's see Deutsche, Mitsuho. Deutsche here. Let's take out the previous one, and then Mitsuho over here. Alright, we can see that they have a pretty similar pattern in the recommendations. So we see that they have gone more conservative, but they still hold a buy recommendation. Let's see a few others that are more conservative. Let's see, for example, Wells Fargo. So here we have Wells Fargo, more conservative than the previous one. Equal weight, that means a hold. So we can see that they had a pretty similar pattern, but they've been more conservative at Wells Fargo. So this is what Wall Street has to say about Tesla. So let's take a look at the current situation where Tesla is. Let's see some of the fundamentals. So we see market cap, pretty incredible, $645 billion income, slightly more than $11 billion sales, around $75 billion. The price earning ratio, as always with Tesla, is a pretty high one. Probably it is justified by the growth that is expected out of Tesla, but we have to consider that as other car manufacturers catch up with Tesla with electric vehicle technology, it will be harder for Tesla to justify these multiples. So Tesla still has to outperform other car manufacturers in order to justify these ratios. So we see the price to sales ratios, price to sale ratio, the price to book ratio also pretty high, and then we see some of the news. Nothing really important came out lately aside from Elon Musk's activities with Twitter and so on. But regarding Tesla, is what came out of China, that after the Communist Party meeting, Xi Jinping asked the United States to ease the tensions. So given the fact that Tesla is very exposed to the Chinese market, both for the factory that it has over there and the market where it sells its cars, the easing of tensions between China and the United States is certainly a positive thing. On the flip side, car manufacturers are especially volatile when there's an economic slowdown, because it's a very cyclical business. People tend to postpone big expenses like a new car when there's an economic slowdown, and they see their pockets shrink, like in this case when we see commodities go up, expenses go up, inflation and so on. So they usually tend to postpone these kind of expenses. So last but not least, let's take a look at the spreadsheet that I've made to see what Tesla has done in the last 10 years, and maybe we can get an idea of where it could go in the next few years. So revenue, we can see the trend. It has gone up and up and up with a very fast pace. The EBITDA, it was negative for a few years, and then Tesla turned into a positive in a profitable business a few years ago. So the debt seems manageable for the size that Tesla has. So the market cap is a pretty important one. We can see that it has gone down quite a lot since the start of the year. That's because of all the tensions that have come up, the economic struggle, the geopolitical struggle, and of course the slowdown, and on the other side the increase in prices of commodities. So we can see the enterprise value to EBITDA. We started taking a look at it since the earnings have got positive, and we can see that the EV to EBITDA is a pretty high one. We'll have to see if that's justified or not, because car manufacturers tend to have lower ratios, so the market is pricing Tesla as a technology company, not as a car manufacturer, and we'll have to see whether Tesla is able to generate growth as a technology company or it will plateau as a car manufacturer. So the shares, we can see that in the last 10 years, Tesla has diluted quite a lot. That was necessary because until a few years ago, Tesla wasn't generating profits, it was generating losses, and it still had to reinvest a lot of cash and debt and capital into its business in order to turn it into positive, as it did in the last few years. We can see that the earnings per share have gone from negative to pretty negative to positive in the last few years, and hopefully Tesla will continue to grow as it did in the last few years, even though the current turmoil makes it harder for the short term. In the short term, it will be harder because of the current situation, the economic slowdown, and we have all learned that geopolitical risk can take a quite important toll on the growth of certain stocks, and Tesla is a big example of that, given that it generates a lot of its revenue in China. So we can see that Tesla doesn't distribute dividends, so that's not a great thing for dividend investors, of course, but we have to consider that not distributing dividends is not always bad if the net present value of the investments that Tesla makes are better than the investments that an investor could make with the cash that the company pays out. It's better for Tesla to reinvest the cash that it has, even for the shareholders. So hopefully it will be able to generate even better returns in the future. So this is it for today. I hope I gave you a good enough blueprint of Tesla. If you liked the video, make sure to like, subscribe, and comment for the next stocks you want me to analyze. I'll answer all your comments, so make sure to use them. If you're interested in the databases that I use, I'll link them in the description.